YouTube, and welcome to the stream. It's July 24th on Monday. Taking a look at the news for this week, we have a bunch of flash manufacturing values today. A lot of the euro and British pound came in this morning, and we have some for the US dollar a little later, about an hour and a bit. Going down, we have Australian CPI, US dollar, consumer confidence. Ooh, another big one, US dollar interest rate decision on Wednesday. Euro interest rate decision on Thursday. GDP values for US dollar, unemployment. Wow, fair amount of news coming up this week. As well as core PCE on the US dollar. Cool. Okay, so some big stuff, especially Wednesday and Thursday for the American dollar and euro. Let's take a look at this. We're on the 5-minute here. We're looking at our baskets. We see the yen is doing well today. So the yen's actually pushing a lot of these pairs down. So on the 5-minute lower time frame, we're looking, maybe check out the basket, see how the basket's doing. Okay, so not super keen on getting much here, just because the Japanese pairs have been slowly raising up the past few days, and today's their first day where they've started to come down. So I don't know. Could just be a pullback day, so I'd be wary of shorting with as much positive momentum as they've accumulated over the past little while. Looking at the US dollar, seems a bit mixed. Canadian dollar seems a bit mixed. The euro's also down across the board. So quickly check out how the euro is doing. All these pairs. Makes sense. It had 3 news evaluations that were all quite negative. And so we had some big drops here from about midnight till half past midnight. 12:15, 12:30. Okay. Roughly coincides with these big drops here. So that makes sense. Could be some opportunity here. Doesn't look like some really good market structures for me, but could always form up a little bit later. British pound seems to be doing quite poor across the board, except for the US dollar, and the euro is doing worse. Not much there. Swissy is a bit of a mixed bag. Australian dollar is a bit mixed, and so is New Zealand dollar seems to be doing well today, this morning. The only one it's not doing well against is the yen, but that's just because the yen's just a little bit stronger. These were a couple trades from the end of last week. GBPNZD, AUDNZD. Both seem to work out pretty well. Otherwise, not. Again, NZD is doing well after a past few days or past week of doing quite poorly, so I don't necessarily know that I'm keen on getting into a buy just yet. would like to see some more market data form, but even then I don't necessarily think it'll be a great trade opportunity today. So let's go to our 28 Forex pair and hop on the hourly. All right. Oops. I'll introduce this stuff in a sec. I'm just trying to hide it. There we go. All right. So we've got some indicators I'll show you for a new strategy for the daily. Nice. Still continuing well up on this amazing trend for CADCHF/JPY. Gotta be honest, there could be some good opportunities there. I just kind of zoned out. It's a little too early. So we'll slowly meander back up. See if anything catches our eye. Doesn't look much like it. Alright, so let's get into the last strategy. This one's really nice. It's really nice because it's really simple. You hop on the daily, you have a couple linear regressions, and you have an SSL channel. So the strategy is as follows. We have a 100 period linear regression, and we have a 200 period linear regression, and then we have this SSL channel, and we're on the daily, by the way. I have not tested this on the 4 hour, I haven't tested it on the 1 hour, and I don't think you can get it on anything lower than that just because of how these linear regression channels work. Quite simple. They help really identify trends. So you can see in the last 100 days we have been on a pretty nice downtrend. We can see in the last 200 days we've been on a pretty nice, on a downtrend, but not a relatively strong one. And they're partly reversion to the mean strategies, but they could also be trend following reversion to the mean strategies as well. And reversion to the mean is just the idea that lots of points of data are likely to, especially when they're trending in a certain direction, they're likely to come back to the mean. So any exceptional points of data, you know, things that go extremely far up, things that go extremely far down, they're incredibly likely to come back to the middle area. So for example, performance values, you know, when some people were performing very well and then they start to perform less well, it's not that they're actually underperforming, it's just that they're performing closer to the average. And so the idea is that when you have something trending up, it's very likely at some point it's going to start to come back down. And this is incredibly true for currencies, especially. Currencies aren't like stocks. Their valuation doesn't increase over time, at least for good stocks it will, or should. You can't have a currency continue up and up and up forever. So for example, let's just stick CJ, because CJ has been doing phenomenal. Like, you look at this valuation, you're like, oh, this is going up and up and up forever. But you look back far enough. Let's go to the monthly. Actually, it looks pretty impressive. This looks like it pretty much has been going up and up and up forever since 2070. I think if you go on one of the other charts, it shows that it was previously at this 155 level back in like 1980 or something like that. And the idea is that this evaluation here is extremely overvalued, similar to like an RSI or something like that, and that price will start to come back down. So for example, we had this nice run up here until about 2015, and then once we had this break back down into the SSL channel, we continued down for a significant period of time. And that's sort of how the strategy, there's a couple ways to play with this strategy. One of them is just identifying sort of the trend on the 200 and 100, and then only going for trade opportunities that align with the trend, so trend following. So for example, here we can see the 200 is going down, as well as the 100 is going down. So you just take sell opportunities in this, you never take buy opportunities, but you always wait for price to come up and touch this 100 first. So for example, price came up. Let's see if we can go for a, where's the replay? There we go. So we replay right about here. We see that the trend line channels are a little bit different. That's because these channels are based on the current data. So as the data changes, these trend line channels will change. Anyways, so we forward one at a time. So we're above the 100, so we're expecting price to come back down. We can see we're trending down, so we're anticipating a sell. And then as price breaks below and swaps the SSL, then we get into a sell right here. Price up here. We can either target a 1-to-1 or a 2-to-1. I had actually targeted 1-to-1 a lot back in the day. And I know that sounds ridiculous to try to aim for a 1-to-1, but I found that I had a pretty high win rate with this strategy. So we forward, and you can slowly see how these channels are changing as we collect more data points. And there we go. We got our sort of 2-to-1, we got 200 pips off this trade. It does take a long time sometimes, like that was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 14, 15 days for this to happen. So that's the thing about the daily time frame, it does take a long time. But the nice part is because it's on the daily time frame and you're literally getting into a sell right when this candle finishes printing, you literally only have to look at the charts for about 30 minutes a day. You just scan all 26 pairs. You already pretty much have an idea. Like for example, when we are back here at this price point, you're already anticipating getting into a sell. You're just waiting for the SSL to swap. And the SSL is literally just a 10, I think it's like a 10 MA moving average variation. And the SSL swaps when price closes above or below. So for example, here price didn't close above the moving average, so it didn't swap, but here it obviously did. Here price didn't close above or below the moving average. I know it looks like it might have, but it didn't. Here it did, so it swapped. Again, price obviously doesn't close there, but it does close here, and so the SSL swaps. So all the SSL is really just a moving average that swaps every time price closes above or below it. So you can have like a day, you know, if you've got price that's pretty close to the SSL, I'm trying to find it where it swaps immediately. Like you can swap literally in a day if you have a huge price increase one direction and then a huge price drop the other direction. I can't seem to find it, but this was the closest one. So for example, price was below the SSL, it swapped, it went above on these next 2 days and then swapped back. So there's nothing magical about the SSL, it's just sort of the trigger for the entry. And the thing about it is, you know, it sort of gives the idea that when the SSL swaps, price is ready to come back in the direction. So for example, as price is going up and touching into these linear regressions, you could be like, oh, it's touched the linear regression, I should get into a sell because it's a reversion to the mean strategy and I want to get into the best opportunity as possible. But I think the issue is that you typically have price can continue to continue upwards indefinitely. Like you look at the probably CADCHF, I'm sure at many points along here price hit the top of the channel and continued down and then just continued higher. He had a nice rejection here but continued higher. I'm too lazy to find really good examples, but hope you get the gist of the idea. So what we look at here is price, it did touch the SSL here. Like this, although it would have been a profit to take this trade here, we wouldn't have known that. This isn't a valuable trade. You want to make sure that either A, you're taking a trade where both the 100 and 200 are being hit and you're waiting for the SSL swap. So probably something like right up around here, that would have made more sense. Or you want to identify trends with the 200 and 100 and then take trending directional trades. So for example, this could have been a good sell here because price had hit the price was above the 200 and the 100 at this point. So yeah, we're well above the 100 and we're well above the 200 at this point. So now we're just waiting for an SSL swap. And of course this doesn't work every time. There are going to be times where it does not work. Okay, so you get into an SSL swap, you put your stops just above the high. And you aim for either a 2-to-1 or a 1-to-1. Again, I was always a bigger fan of aiming for a 1-to-1. I think this is gonna close out, yeah, before. So anyways, yeah, this is the nice strategy here. It's literally very quick. You just quickly identify where price is in relativity to the 100 and 200, and then you wait for those SSL swaps. So yeah, that's it for today. Thanks for tuning in. I will be using this strategy over the next coming days to weeks, so we will see how it does together. Alright, cheers, thank you, and maybe see you tomorrow.